the best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. With global markets navigating a mix of inflation concerns, geopolitical tensions, and policy uncertainty, precious metals have emerged as a standout performer in the first half of 2025. Gold is up nearly 28% year-to-date, with silver not far behind, buoyed by safe haven demand, a weakening U.S. dollar, and industrial use cases in green tech. Now, that's according to the Golden Minutes report by Rotbart Co, which provides in-depth analysis of key market movements and influences. As central banks recalibrate, the Fed signals possible rate cuts, and investors seek refuge from currency volatility, the role of real assets, especially precious metals, is being redefined. So where do we go from here? Can this momentum in gold and silver be sustained? Well, to find out more, joining me now is Joshua Rotbart, who's a founder and managing partner at Rotbart Co. Joshua, welcome to the show.
Thanks, Hongbin. Good to be here on the show again.
Thank you so much for joining us. Well, Joshua, gold and silver have posted impressive gains this year. Do you see this trend continuing in the second half of 2025?
Absolutely. Based on what we've seen so far, the strong momentum behind both gold and silver, that is likely to extend into the second half of the year. Gold has already gained nearly 38% year to date, and silver is up almost 30%, most of it in the last few weeks. Now, nothing really changes in terms of the fundamentals that made this 2025 a very good year for both metals, actually for all precious metals, in terms of this combination of geopolitical uncertainty, concerns about inflation, and the broader economical shifts. So we also see interest rates soften and central banks continue buying gold. So we're likely to see continued support for both metals.
Okay, so what role is central bank demand, though, playing in the current bull run for gold?
Listen, central bank actually since 2008, the demand by central banks has been one of the most important structural drivers behind gold's strength. If you're looking at the data, 2025 shows another strong year for purchases of gold by central banks. They've been buying more than 1,000 tons year on year now for the last 5 years. So the central banks are looking at it from what they call financial security. And when you look at the survey of central banks recently done by the World Gold Council, you see almost 80% of the central banks that participated look at increased purchases by gold. So definitely we're looking at the activity that creates a strong foundation for the market.
All right. Then how much has the decline of the dollar contributed to gold's bull run?
Gold and dollar has inverse correlations. Usually gold is perceived as an alternative to the US dollar. So when the dollar is weakening and we see a pretty strong decline, almost 10% year to date in the dollar index, gold is very supportive of the price of gold. Investors are concerned about the national debt, and they're looking maybe at monetary easing by the Federal Reserve, and most importantly, a weaker dollar makes gold more attractive to international investors because it is cheaper in their local currencies, and we see it across the board. So when investors are looking for alternatives and when the dollar is going down, again, very supportive of a strong gold price.
So on that note, Joshua, how does ongoing de-dollarization influence global asset allocation strategies, especially in terms of shifting assets into precious metals?
This is a great question because de-dollarization has been on investors' mind for quite some while now. Again, if you look at the data, the use of the US dollar as a reserve currency for countries has gone down quite dramatically in the last 25 years, almost 20% decline in the use of US dollar as by central banks. So when you see it by countries, Russia, China, they are actually getting rid of their USD denominated bonds and are buying gold instead. So if you look at de-dollarization, meaning using the dollar less, as I mentioned, gold is an alternative. And definitely it creates more demand for gold, both by sovereign countries and sovereign banks, but also by family offices and other investors. Because from a portfolio strategy perspective, they need more diversity, and there are not too many good, reliable alternatives to the US dollar rather than gold.
Meanwhile, silver's performance is closely tied to green tech. How sustainable is this demand growth over the long term?
We think the demand for silver is very sustainable. Again, as you mentioned, silver is used for green technologies such as solar panels, electric vehicles, and energy storage technologies. There are going to be more use cases for these technologies, meaning there is a need for more silver, physical silver in the industry. And supply is not keeping up at the same pace. So there's a structural imbalance that could support prices for the long term. So although strong demand, a bit of deficit in supply, and I would also mention that we've seen silver a bit underappreciated compared to gold. So all this creates a very sustainable demand for the medium term.
Mm. And with platinum outperforming other metals year to date, what's driving this rally? Is it a temporary supply shock or something more structural?
I think it's both supply. There's a bit of lack in supply in terms of supply constraints from key producers in Africa, but there's a growing structural story. First of all, we need to think that platinum is used both for jewelry and automotive industry. Now, the use of platinum in the jewelry industry has gone up just because the price of gold has gone up so much. So platinum suddenly became a cheaper alternative to gold. We used to call it the white gold. So the jewelry industry is using more platinum, substituting gold to some extent. But more than that, I think we look at the broader push towards energy solution. Platinum is used as a component in fuel cells. So we're looking at, due to this evolving industrial demand, we look at platinum as a metal in need. Again, green energy, fuel cells, all these need more platinum.
Mm. And I mean, how should investors balance their exposure between gold, silver, platinum, and palladium in today's macro environment?
So look, it's really four different metals. So in a nutshell, I would say gold is the more traditional, stable asset. It's the foundation of a precious metals portfolio. It gives you a very liquid and universally trusted store value. And it depends on the risk perspective. I'm personally very risk averse, but I can tell you most of our clients at Rotbart Co, they buy, I would say, at least two metals because they use the foundation of gold. Then they top it up with silver because it has more potential to growth. You can buy more silver with your dollar. Platinum is a tactical investment with long-term potential. Palladium, I would say it's more volatile and it's relevant, but this is relevant for really investors who are looking for this specific metal. It's quite niche. And I would say invest in palladium if you know the metal. If not, again, we at J. Rotbart believe gold is the fundamental asset. Add some silver, at least 30% to your precious metals portfolio, and spice it up with some platinum.
So how do you view precious metals as a diversification tool in 2025 compared to traditional assets like equities and bonds?
Look, precious metals have always been a valuable role in portfolio diversification, but in 2025, they're arguably more important than ever because all these traditional assets are facing considerable headwinds, whether it's due to high valuation, interest rate volatility, geopolitical risk, and precious metal by contrast offer a non-correlated alternative that can help preserve capital and reduce portfolio volatility, especially gold. So we're seeing more investors allocating a larger percentage of their portfolio to metal as a way to enhance resilience and hedge against the unknown. I can tell you when I started working in the precious metal industry 15 years ago, people would mention 2-3% investment out of their total portfolio in metals. We now see more 10% and even 15% allocation to precious metals. It gives stability, it gives safety.
So what's the best way then, Joshua, to gain exposure to physical bullion versus ETFs or mining stocks in the current market?
Look, my personal opinion is that mining stocks are a different breed because even if the bullion market is doing very well, that management of a mining company will tank the stock. So I would put this aside and I will focus on the ETF versus the physical. I believe the ETF is a great tool for, I would say, either to begin your journey into the precious metals market or for short-term trading, I would say, purposes. But again, if we're looking at the medium to long term, we want to see investors buy the physical metal because it gives them the safety they need in a changing world. There's no counterparty risk. You own the asset. You don't need any mediators. So it's really way safer, I would say, in terms of wealth preservation, wealth planning, just to buy the physical bullion. And there's so many good options today, especially here in Singapore, to do that.
So how should investors think about inflation hedging now that the narrative is shifting from rate hikes to potential easing?
Look, inflation hasn't disappeared. In fact, it's evolving. And I can tell you, I traveled the world very extensively. And everywhere I go, whether it's Asia, Southeast Asia, North America, if you talk to the taxi driver, the Uber driver, everyone are complaining about the cost of living. It sometimes it's not being reflected necessarily in these statistics, but the cost of living are on the rise everywhere. And here comes a nice feature, a very good feature of gold. It's the fact that it preserves the purchase power. So what we could have bought 4 years ago with an ounce of gold, we can buy double or triple of the same item today. So if you're looking on rising cost of living or what we say in inflation, definitely we can still feel it, and gold is a good hedge. On the interest side, lower interest rates are supportive of price of gold because the alternative costs of holding non-yielding assets decreases. So if you put your money in a bank and you get, let's say, 1% deposit, because interest rates are down, you might as well buy gold and other metals because then the alternative cost is really negligent. It's really neglectable. Yeah.
Okay, then overall then, would you say that we're entering a structurally different phase of market behavior where real assets take priority over paper ones?
I agree with you. I think it's a great observation. I wouldn't say it's a major shift yet, but we see investors, I would say, waking up. We see how they view risk and value. There's growing skepticism around fiat currencies, geopolitical fragmentation, and there is a desire for tangible, reliable assets that hold their value across time and borders. So precious metals fit this bill perfectly. Again, I travel the world to talk to many people, many investors, very rich or not so rich. Everyone are concerned. Everyone are looking at the world we're living now and saying, how can we protect ourselves? All these virtual assets. People just want real assets to hold on in this changing world. And we definitely see this shift.
And before we let you go here, Joshua, anything else from your Golden Minutes report you'd like to highlight as well?
Again, I'll just say that gold, silver, and platinum have all had a remarkable year so far. US dollar is weakening steadily, which adds momentum to the metals market. So we do encourage investors to diversify into physical bullion and take advantage of the current market trends. I would remind our listeners that silver connection to green energy is getting stronger, and that these long themes like sustainability, de-dollarization, and inflation are not going away. So it's time to reevaluate how our wealth is protected.
Some great insights from you there. Thank you so much, Joshua, for joining me today.
Thank you very much, Hongbin. It's a pleasure.
Thank you. That was Joshua Rotbart, who is the founder and managing partner at Rotbart Co. This has been The Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.